Welcome to Gold Investment Options in India, a comprehensive guide. Unlock gold's full potential for your portfolio. I'm Manu Goyal, and today, we'll explore how this timeless asset fits into the modern investment landscape. Let's begin. In India, gold is more than just a metal, it's woven into our culture and traditions. But today, gold is also a strategic financial asset. Gone are the days when jewelry was your only option. From digital platforms to sovereign-backed bonds, gold investment is evolving fast. Choosing the right form depends on your goals, your risk appetite, and how taxes affect your returns. Here's your gold investment playground. There are 5 major ways you can invest in gold today. Physical gold, like jewelry and coins. Sovereign gold bonds, issued by the government. Gold ETFs, traded like stocks. Gold mutual funds, managed professionally. And the newest player, digital gold, available right on your phone. Let's break each one down. First up, the traditional favorite, physical gold. Jewelry, coins, and bars, these are tangible and hold emotional value, especially in Indian households. They can also serve as collateral for loans. But be cautious. Jewelry comes with hefty making charges and wastage, sometimes up to 25%. There are purity concerns and the added burden of storage and security. And when it comes to liquidity, selling isn't always instant or cost-effective. Next, let's talk about a smart option, sovereign gold bonds or SGBs. Issued by the Reserve Bank of India, these are government-backed, making them among the safest. They pay 2.5% interest annually, and there's no worry about purity or storage, everything is digital. They mature in 8 years, but you can exit after 5. Minimum investment? Just 1 gram. And there's often a 50 rupee discount for digital purchases. Ideal for the long-term investor. Looking for flexibility and market exposure? Consider gold exchange-traded funds, or gold ETFs. These are mutual funds that invest in 99.5% pure physical gold. You don't own the gold physically, but you can buy or sell units on the stock exchange in real time. It's cost-effective, transparent, and highly liquid. Perfect if you already have a demat account and want to trade gold like stocks. Don't have a demat account but want to invest in gold. Gold mutual funds or funds of funds are your answer. They invest in gold ETFs, giving you indirect exposure to gold. You can start a systematic investment plan, SIP, and let professionals handle the rest. It's flexible and convenient, but keep in mind, the expense ratios are slightly higher due to the layered structure. And now, the latest trend, digital gold. Buy gold anytime, anywhere, starting from just 1 rupee. Your gold is stored safely in insured vaults, and you can even opt for physical delivery later. Sounds great, right? But there's a catch. It's currently unregulated by RBI or SGB, and you pay 3% GST on every purchase. Great for short-term convenience, but not recommended for long-term investors. Let's take a quick look at all the options side by side. We've compared them based on form, purity, storage needs, liquidity, interest income, and taxation. This snapshot will help you match your needs with the right type of gold investment. Pause here if you'd like to study the table closely. So, what's the best gold investment for you? If you are looking at long-term wealth creation with tax efficiency, sovereign gold bonds are unbeatable. Want market flexibility and liquidity? Go with gold ETFs. No demat account and want regular investing? Gold mutual funds via SIPs are a solid choice. Need small, instant access. Digital gold works, just be cautious about regulation. And for traditional or gifting purposes, physical gold still holds value. Your choice should align with your financial goals, holding period, and tax profile. Now let's talk about something crucial, taxation on gold investments, as of June 2025. First, the general capital gains rules. If you hold gold for less than 24 months, it's treated as short-term capital gain and taxed at your income tax slab rate. But if you hold it for more than 24 months, it's long-term capital gain taxed at a flat 12.5% without indexation. This rule came into effect on 23 July 2024 under the Finance Act 2024. Now let's break it down by investment type. Physical gold, digital gold, gold ETFs, and gold mutual funds all follow the same general short-term and long-term rules we just discussed. But sovereign gold bonds are different. The interest income you earn every year, that's taxed at your regular slab rate. But here's the big benefit: if you hold them till maturity, 8 years, the capital gains are completely tax-free. If you redeem them early, after 5 years via RBI, you pay long-term capital gains tax at 20% with indexation. And if you sell them on the stock exchange before maturity, then the regular capital gains rules apply. Taxes can significantly impact your returns, so make sure to factor them in, and when in doubt, consult a qualified tax advisor. Let's wrap up with a few key takeaways for building your gold investment portfolio. If you are aiming for long-term, tax-efficient wealth creation, sovereign gold bonds are usually the most rewarding option. For market exposure and liquidity, gold ETFs are ideal. Don't want a demat account? Gold mutual funds offer SIPs and ease of access. Need flexibility and convenience in small amounts? Digital gold delivers, but remember, it's currently unregulated. And for emotional or traditional needs, physical gold still holds timeless value. The best strategy: diversify. Use a mix of gold investment types based on your goals, timeline, and tax preferences. Finally, go ahead and assess your financial goals and risk appetite. Consult a trusted financial advisor and build a gold investment strategy that truly works for you. Thank you for joining us, and happy investing. I hope you found this guide helpful in making informed financial decisions. But wait. Before you go, if you enjoyed this video and found it valuable, hit the like button, it really helps. Subscribe so you don't miss out on more insightful content. Share this with friends and family who might benefit from smarter gold investment tips. Let me know in the comments which gold investment option fits your financial goals. I'd love to hear your thoughts.